So we'll just start. Good evening, everyone, and welcome to today's webinar under the RNA Knowledge Series 2026. I am Manisha Chaudhary, and I'll be moderating today's session. As many of you are aware, RNA is celebrating its 30th year, and as part of this milestone journey, we have taken initiative of conducting knowledge-driven webinars on various topics. So far, we have completed 10 webinars, and today we are hosting the 11th webinar on Secretarial Audit, Compliance Framework, and Best Practices. To guide us through this subject, we have Ms. Bhavani Chandolu. A very warm welcome to you, ma'am.
Thank you, Manisha.
Yeah. So with the close of the financial year now, companies are presently in the process of conducting the secretarial audits and obtaining MR3 reports. And during this time, practicing professionals, company secretaries in employments, and even management teams often encounter practical questions relating to what is the scope, reporting standards, some queries. So considering that, we felt that this was the right time for the discussion on the subject. Like all of us are aware that secretarial audit is guided by Section 204 of Companies Act, and it's a compliance audit of non-financial matters. It is designed to provide independent governance assurance, verifying whether company has complied with applicable laws, proper board processes, and maintain adequate system. So our team has gone through provisions and articles and come out with practical questions faced during the audit. The questions will be posted in chat box as well for ease of reference. With that, we'll kickstart the session with the first most common query which we have is like for conducting secretarial audit, the perspective of a practicing company secretary and company secretary in employment can sometimes be different. So from practical perspective, ma'am, how should both in-house CS and secretarial auditor approach their responsibility towards applicable laws?
Yeah, thank you, Manisha. So I was thinking to have a little interaction. My voice is audible, right, Manisha?
Yes, yes.
Sandeep, background. Yeah, thank you. So let us see if this can be made interactive. So first and foremost question to everybody who have joined here is, as a full-time company secretary, I wanted to understand, and I have a statement. Let us understand whether that statement is true or not. So as a company secretary, I'm responsible for Companies Act compliance and other corporate laws covering, SEBI laws or RBI laws, only applicable, only to that coverage. I'm a company secretary responsible. Is my statement correct or not? This is mostly for full-time company secretaries, but otherwise also. Is my statement correct? All right. I will put a second question. How many of us have gone through labor code? Labor code is already effective. Of course, rules have come very recently, but how many of us all have gone through the labor code? No responses. That means no silence. Agrees everything. So another question is there in front of you. In AP, Telangana, there is a concept called the compulsory gratuity insurance rules. How many of us are aware of it? Not really. So interesting point is that as a company secretary, one of the niche function of a company secretary we should observe, and that is specified under Section 205. If you keenly observe it, Section 205 1A talks about functions of a company secretary which extends beyond company law. It says compliance to the law, about compliance with the provisions of this act, the rules made thereunder, and other laws applicable to the company. So that means as a full-time company secretary, it is the responsibility of the company secretary. It is the function of a company secretary, not just only to company law, but it's extended to all the laws applicable. So, as you rightly questioned, Manisha, usually company secretaries, what they say, I am a company secretary, I'll take care of company law. What happens beyond that is not my cup of tea. There is a separate legal department, which labor department, finance department, HR departments, there are different departments which takes care of it. So it is our responsibility to ensure to first list out what all laws are applicable. So that is where inception of coverage of loss comes in. So I think with this outset, we should start the coverage of secretarial audit. So as a company secretary, it's not just company law or corporate laws. This is what I wanted to communicate.
Right. Thank you. Like in furtherance to that, like as you said, there are a lot of other laws which a company secretary has to focus on. It's no longer restricted to Companies Act or SEBI or FEMA, but various sector specific laws. So in such a complex environment, every company secretary or professional aims that they be as compliant as possible. They try to give their 100%. So what is the best approach or practices which a company secretary can adopt to follow this?
All right. Manisha, before going ahead to answering this question, you can just open the chat board. People are responding to it. Maybe it will be really interesting or interactive to them. Okay.
Yeah.
So, yeah, I well understand your second question. Now, same question I wanted to pose to the audience. As a full-time company secretary, usually when I attend the CLDP program, or Venkatramana also keeps hearing in here or the other sessions, people wanted to know whether I'm 100% compliant always. People doesn't want to take, meaning people in the sense company secretaries, full-time company secretaries wants to know that whether I'm 100% compliant or not. This is what we are talking. Too many laws, too many regulations, too many guidance notes. Lot many things are there. Now in that context, it is very hard to ensure that compliance is 100% or 200%. So there is a technique or a tip which I can give you, so that it sets as a standard, wherever you go for, wherever anybody looks at compliances. So one is action, corporate action, or whatever it is there. Of course, procedures, small compliances will be there. Majorly is the processes in the sense, you can take as a private placement, you can take rights offer, it could be director's appointment, or giving a loan, or etc. Many processes are there. So when you talk about one process, there is a hierarchy which we have to understand, and the agencies which are involved. Hierarchy in the sense, you have at a lower level, committees are there, audit committee, remuneration committee, committees are there, where we have to ensure that whether committee's approval is required or not. Then comes the next hierarchy, board approval. Next comes the general meeting approval. And then agencies, I talk about regulators. So that is when we have to see, is there any approval which is required from the shareholders. This sets the standard, any process for that sake, whether it is company law or any law for that sake. Obviously, in other laws, what happens is you don't have approval of the board, etc., but there is a process which is given. Now, for example, you have to strike, employees wanted to go for a strike. So it's not just a piece of paper you write to the management that I'll go on strike. There is a process given under. So that is an action which I'm talking. So we have to see what is the process given in any law for that sake. Second is forms or returns to be filed, reporting to be done from time to time. So this is non-negotiable. One is the process. The second one is the form returns or reporting to be done. Next thing what we have to check is the register. So for the corporate action and the forms which we have, are there any registers to be maintained? This is across any industry, any regulation. Next comes is the displays and disclosures to be made. So if you talk about Displaced Labor Act or Child Prohibition of Employment of Child, there are certain regulations which says that certain disclosures are non-negotiable. Okay, or if you come to Companies Act, it says that you have to disclose something in the website. Time frames are given. So these are the things which we have to take into consideration for the corporate actions which we are talking. In general, kuch bhi nahi rehta.
I just want to add one here. As you said, all these are okay. Only one additional point is filing of statutory payments, like PF you deduct, you will make the statutory payment. This is one. And periodical and event-based returns. These are all part of the compliance management.
Absolutely.
Yeah.
Yes.
So I just want to add the two things. First, licenses, approvals, registrations, renewals of the licenses. Then whatever all you said, apart from periodical event-based returns and statutory payments on time.
Yeah, when I covered forms returns, I mean payments are also covered. We can add it up, but that is how we have to look at. And last, another thing is also there, Venkatramana, other acts. Now, for example, that sometimes some process will have a bearing on other act, especially it is coming to Companies Act. See, for example, we wanted to issue preferential issue shares. So then we have to look at, of course, in company law, preferential issue, there is a pricing which is provided, registered valuer has to give. But what methodology should be adopted? These things are decided or explained in an income tax act. Or if you are issuing a share certificate, we have to double check on, is there any other law for which additional compliance is required, like Stamp Act is there. We have to ensure that stamping is done. So if you cover this in what in these 5-6 segments which I told you, now procedures, or slash what Venkatramana says, registrations, renewals, part of it. Second is the returns, returns, forms, or payments from time to time, registers to be maintained, displays or disclosures to be maintained, and other enactments. If these 5 buckets are understood, I can tell you that you are almost reaching 100%. If this is the thumb principle which a company secretary in full-time employment or practice have to adopt to ensure that it is taken care.
Yes, ma'am, totally agreed. And to help the processes, it really helps if you have a tracker in place for your periodic or event-based filings, and set out an SOP and plan of action beforehand.
Absolutely. Maybe, Manisha, what we will do is whatever tracker we've done, we will show it to the team. Maybe in the next 2-3 questions what we have, so that they will also get an idea about it.
Definitely.
Well, yeah.
So the next thing which we face, like when secretarial auditor is being appointed, we know generally process starts with board meeting, passing of resolutions, and filing of MGT 14. But from a practicing company secretary perspective, what should he take care of when he's being appointed as an auditor? Are there any steps which professionals tend to overlook?
Okay.
Your point of
Yeah, this is very crucial for appointment of secretarial auditor. So yeah, as everybody is aware, ICSI has come out with the auditing standards, secretarial auditing standards in 2019, and there are 4 standards out of it. Out of which first one talks about the engagement, whatever relevant question you've asked right now. So other than what processes you mentioned, appointing, filing a form, etc., the other documents which are not visible are engagement letter. There are 3 things which I can highlight here. Engagement letter is crucial here because you have to talk about the scope and limitations. So when I spoke about the laws which we will be covering in the secretarial audit, of course we will cover, but industry specific laws or the coverage, some companies, bigger companies, would have n number of transactions. So it is highly impossible to review all the transaction. Like for example, letterhead has to be reviewed, letterhead compliances. It is not possible for us to review all the letterheads. Maybe samples we take it, okay, or otherwise contracts by HR, authentication of documents are there. So this is also cannot be reviewed completely. I'm just taking random examples, some examples which will be plenty in an organization. So understanding what is the scope, what is the coverage, to what extent we will go, what kind of milestones we will have, industry specific laws, what is that milestone we take it, or listing out laws which are applicable, whether company has already listed the laws which are applicable to the organization, they're reviewed by somebody else or not. These are the key factors which a PCS has to be taken care before getting into engagement, because this is where the time is spent. Accordingly, we have to list out the scope, engagement, limitations, and charges. These are the important things which will go in engagement letter. And the other important thing is conflict of interest. So if you see that auditing standards, they have prescribed the code of conduct, conflict of interest. Say, for example, 2% of the shareholding, or I think it is 50,000 rupees, whichever is less. If a secretarial auditor is having that interest in the company, he should disclose to the company. So this is a disclosure part, there is no prohibition for him not to carry out, but it is important to know the interest what he carries out while carrying the secretarial audit. And if there is a previous secretarial auditor, obviously as institute guidance note, we have to ensure that previous auditor is given in communication about our appointment and no objection for us to carry out these activities. So these are smaller things. It looks very smaller, but it is important for a PCS to take care of it. So this is important to be noted.
With that said, like the appointment process under SEBI LODR is quite different than what of Companies Act. So can you please put some light on that as well?
Okay. So prior to 2024, obviously every secretarial auditor is appointed for a period of 1 year, whether it is listed or unlisted entity. But now, because of LODR Third Amendment Regulations 2024, which is effective from 1st April 2025, has come into effect. Every listed company can appoint an auditor, should appoint an auditor, secretarial auditor for a period of 5 years, if it is a sole proprietary concern or an individual secretarial auditor. But if it's a firm, LLP or a partnership firm, that is when they will have a block of 10 years. So this is the time frame which is provided. In addition to that, approval of the secretarial auditor should happen in the general meeting, AG. So these are the changes which have come, and other minute changes have come, but these are noteworthy for us to take care of it.
So this framework they have set out in Corporate Law Amendment Bill as well, where
Yes.
they're proposing appointment of secretarial auditor for 5 years.
Yeah.
Yeah. So moving on, we have like.
So there is a question, Manisha, for
Yeah.
unlisted subsidiary also we need to appoint for 5 years. Standalone audit not applicable to material subsidiaries. So as part of listed entities, unlisted subsidiaries also need to appoint for 5 years is the question. Okay. Let us examine and get back to them. We'll just check it out and go back.
Yeah, material unlisted subsidiaries also are required.
5 years, huh?
Yes.
Let me just look at it. Yeah, correct. Absolutely. Yeah. But nevertheless, we'll just respond to that again.
Yes. So once the engagement is signed and the auditor is appointed, so there is always planning and mindset stage going on. And in practice, many professionals directly jump into checking forms and compliances. But as an experienced secretarial auditor yourself, what should be the real mindset before initiating the audit? Like, what are the key things should be examined during the initial stages? And what are the things which should be approached as and when you start forming observations for MR3?
All right. So when comes the scope, now as I told you earlier, scope is the first step when engagement happens. So based on the scope, we have to create the checklist. So we can have 3 separate checklists, one for company law, one for industry specific law, and other for general laws, labor laws, etc. So the checklist has to be framed, and when you frame the checklist, you should have some supporting documents to double check that. So financial statement, there are 2 kinds of reviews which we can happen. First is the checklist framing, Manisha. I think this is the time for us to show the checklist which we have done so that we can explain them what kind of checklist we can create for secretarial laws.
My screen visible?
Not yet, Manisha. Yes, now it is visible. So this is a sample checklist which I can show it to you all. So this is a basic information which we have covered, dashboard sort of thing. Because one important and interesting thing under Companies Act is that class and class of companies is defined, and a lot of applicabilities are dependent on class and class of companies. So for that reason, we should take all the details which are needed for categorizing under class and class of companies. And in general, these are the tables which we have created. Board and KMP, you can let us go with the dashboard and just see the names first, Manisha. So these are the things which are applicable in a company: board meetings, audit committee, NRC, CSR, ESG, AGM, EGM, and MCA filings also is there. Share capital, which is crucial to the company, charges. These are sample things which we have done, and we can just click one sheet and then see. One meetings, let us take it, Manisha. Board meetings, let us go. Anything. Yeah. So if you see board meeting, date of meeting, time, total meetings held, each agenda wise we can have the summary created here so that we know what compliances we have to meet. And the time gap between the two board meetings also can be calculated here, and we can ensure that we are capturing all the requirements under the Companies Act. So this is a sample statement we have, and there itself we can have remarks and observations. And I would suggest this checklist is very important, because as we were talking about auditing standard, we should maintain this collection of data is important, retention of collection of data, and our summary also has to be maintained at our end for a period of 8 years. So this is something which will go for peer review as well. Hence maintaining the data is very important, so that whenever peer review happens every 5 years, it is easy for us to show them what documents we have collected, how we have summarized, what opinion we have framed for each agenda item. Okay, let us skip to AGM. Just let us go to AGM column. Yeah. So AGM, gap between two general meeting AGMs we have covered, and who are all present. Of course, list can be mentioned over there. What observation we have, management responses. So once we get the responses, that is when we can keep it closed, open in the sense if it is required to be reported in the secretarial audit or not. If it is closed, that means it is clean, something like that. Can we go to other things? Yeah, MCA filings. So this is something which is required to understand whether the company is governance oriented in filing the forms on time or not, whether there are multiple times of deviations in filing the forms, So for that, we need to understand and create this kind of table. Let us go to the next thing.
You can show Secretarial Standards, Manisha.
Secretarial Standards, SS compliance. Yes, meeting wise, the Secretarial Standard provides certain conditions when you are giving the notice, date of meeting, venue. These are small minuscule points which tend to be missed out by a practicing professional when we do this job, because time is the essence for us, and we will not end up taking too much time on it. So it is always better to have to capture all this sensitive information in one page, so that it is easy to compare and verify the compliances.
Yes, ma'am, totally. And like in this single sheet, we'll be able to record the management responses as well, which will act as proof of audit. Anybody who wants the access of this utility can please let us know. We'll share the access as well.
Absolutely. This can be improvised. This is a standard thing which can start off, and we can improvise that based on the need.
Yes.
So this kind of checklists have to be done. And while reviewing, my suggestion always is you have to rely on the financial statement, because balance sheet and P&L throws a lot of information. So even if they don't give audited figures, obviously none of the companies will have audited figures when we start the secretarial audit. So we at least should insist them to give the unaudited results, based on which we can do our review of the minutes, forms, everything. And when final audited figures are, given to us, we can double confirm, are there any changes between unaudited and audited. That is when additional compliance can be looked into. Otherwise, every secretarial auditor or a full-time company secretary at the end of the year, they have to ensure that financial statement captures all the transactions or actions which have happened during the year. So this takes care of the compliances. This is the exercise which we should follow.
Ma'am,
and importantly, yeah, tell me, Manisha.
Can you highlight the high-level areas in the financials which a company secretary should focus on while carrying out the audit?
Okay. So for this, balance sheet is the toppest thing. Every line item, I would say it is very important. So if you go with the balance sheet asset side, you have, liability side, you have the share capital, authorized share capital. This is, what is it, this called? Okay, let me continue the content. So share capital, obviously we have three concepts: authorized, issued, and paid up. So authorized capital, we have to check memorandum of association. And issued capital, obviously when issued capital comes up, we have to see preferential issue, private placement, or rights issue regulations, or ESOPs regulations, to see the quantum is correctly matching or not. Then automatically, as earlier I said, the process part of it, board meeting, shareholders meeting, forms, etc., has to be looked into. But at a top level, we have to see what are the sections which has to be looked into. Then comes the debentures. If at all the company issues debentures provisions have to be looked into. Loans, if the company has availed loans from banks, then obviously 180 section, 179 section, charge creation, these sections have to be looked into. These are at a very high level on the liability side, and on the asset side, you will have asset side. What will you have?
Any loans granted to any subsidiaries?
Yes, loans, deposits given to other parties. 179 gets hit on it. Investments in other companies gets hit under balance sheet items. So these are the major things which are covered under balance sheet items, and more importantly, MSME reporting. How many of them are MSMEs? Notes to accounts will give the data so that we can see whether MSMEs, whether if there is a due amount, then accordingly MSME forms are filed or not. And another important thing is that compliance of deposit regulation is something which can be narrowed out from the financial statements only. These are the high ticket items which comes from the balance sheet items. While coming to the P&L items, statutory audit fees. And the statutory auditor taking up assignment other than statutory audit. If you see the breakup of the salary of stat auditors, that is when we'll get to know what restrictive areas they are doing, for which necessary approvals is taken or not. Director remuneration is another important area which we have to look from the balance P&L item. And revenue operations. So you have to understand from where the revenue is coming up, whether within the main objects or, objects have been changed or not. Let me tell you, this instance has cropped up in 2-3 assignments where we have gone through. Revenue item, we were able to identify and guide the company, to ensure that they modify the articles of memorandum of association to take up the additional activities. So these are important things which will come into place. And NBFC
also, ma'am, I want to add one thing. I think everything is interrelated. Suppose if you take borrowings, if it is there, then you should see that whether there is charge is there or not. And you see the resolution has been filed or not, MGT 14. At the same time, it will redirect to the charges, register of charges and the borrowings. So the moment we see the financial statement, any figure, that will be interrelated to 3-4 more other compliances.
That's what, Sandeep, this mapping has to happen. One question me and Venkataramana was explaining, for us to see the compliances, procedures have to be looked in forms. I told you 5 segregations of activities. No, that has to be mapped with the balance sheet items.
Right.
Then damn sure, there will be very least non-compliances in a company.
One point I just want to add here.
Yeah, I was about to ask you only for your inputs. Yeah, tell me.
Yeah. Now, one important thing is in the secretarial audit, there will be 3 types we will go through. One is the events arising out of the transactions arising out of board and general meeting procedures. Events under Companies Act. Okay. Second one is events arising out of the e-forms filed with the MCA. Why I am telling? Sometimes what will happen? 179 before, without passing the resolution also, because banker has asked, you will file the charge form, CAG1. Okay. So the matter may be skipped from the board processes, but still the transaction might have happened. The third important thing is the transactions, hidden transactions arising out of financial statements. For example, if you take loans and advances and unsecured loans. These are 2 major items which you need to take party-wise details, sundry debtors and creditors. For example, in the sundry debtors and creditors, there is some related parties are there. If you take out the MVP ones and compare with this end list of sundry creditors with the dates of time, number of days of due and all, then we will come to know if any related party transaction is happened there or not. So you have to analyze the hidden transactions by asking further data relating to loans and advances, especially advances. Advances, the auditors are very smart. They will say advances recoverable in cash or kind.
Correct.
End of the day, they have given to the directors only. That is actually 185 order violation of the provision. But we will not come to know unless we ask the details. So what is that to be done is sundry creditors, sundry debtors, loans and advances and unsecured loans. For these items, we need to take the total details on the 31st March date party-wise names with the date of transaction and amount to dues. Then we will have control over all the transactions.
Absolutely. One more point to add, Venkatramana. I mean, here there is a concept of deemed deposits where, if you don't deliver the services or, products within 365 days from the date of receipt of advance, that falls under deemed deposits. Even from that perspective, whatever point you said is important.
Yeah. See, the unsecured loans is for 185. Advances are sundry debtors is for 73 section.
Absolutely.
No,
Absolutely.
because 365 days is lapsed, you have not delivered the goods, you are showing it in advance. Actually, it is not our issue. The problem is the auditors are over smart. They will use the names in a different terminology, sir. So they will say advances recoverable in cash. What is this advance recoverable in cash? From whom? End of the day, it is director only, or related party.
Correct. No, I agree with you completely. So, but that rigorous exercise has to happen, and that research and asking data again and again is more important here for secretarial auditor.
Yes, ma'am. Agreed. So, one of the practical areas where professionals often face confusion is when the applicability of secretarial audit starts after the thresholds are crossed. Suppose a company has exceeded the prescribed limits due to increase in paid up capital or turnover. In such case, when does the secretarial audit become applicable? Is it immediately or from the next financial year?
Okay. To this, there is a direct provision which is given under the Companies Act, Manisha. If you see the explanation which is provided in Rule 9, it says that the basis for the applicability should be taken based on the latest audited financial statement. So, if audit is not completed, our appointment will not happen. So, for that sake, we have to wait for the audited figures to be completed. Only then we will come into picture. Meaning, for example, 31st March 2025, the authorized capital got increased, the paid up capital got increased, impacting us to get a secretarial auditor. But audit is not completed on 31st March 2025. So the audit will be completed and audit report will be adopted only in September 2025. So 2026 is what we will appoint the secretarial auditor.
I think slightly differ because you need to take the reference of the definitions also. Because each definition, when you say the borrowings definition or the capital definition, because the parameter for secretarial audit is the 3 items, I think, Rule 9.
Yes, capital, turnover, and outstanding loans or borrowings.
Turnover. So we have to always refer to the not current year this thing. You have to look at the previous year audited. Like for example, 26, whether secretarial audit is coming or not, we have to do it or not. You will come to know when you refer 2025 balance sheet, because the turnover is always under the act as per the definition, turnover of the immediate preceding financial year. If you see the definition, so you have to correlate. Then for this year, you are asked to conduct.
Sir, what you are saying is, suppose in the mid of the year, if the paid up capital has increased, suppose in the month of September, so immediately it will apply, right? You need not to wait for the audited financial.
Yes. So 3 parameters we have to look is per the definition of that parameter.
I think only for the purpose of the paid up capital, right?
Paid up capital and the 3 parameters. No, turnover is always previous year only, audited only. Okay.
But actually, in the rule explanation, they have mentioned all the 3 parameters should be based on the latest audited financial statements.
Latest audited is previous year audited only, no?
Obviously.
Otherwise, this year audit you will not. This year audit report only in annual report only you will attach your MR3. That means for the previous year only you have to check, not current year.
Then in that case, whatever you are saying and whatever I am saying is one and the same, Venkatramana. So I am also saying the same thing. Audited financial statements only have to be taken into consideration for the coverage of secretarial audit.
Correct. But applicability you have to check previous year numbers.
Previous numbers only.
Yes, previous year numbers applicability you have to check, and report will be given for this year figures.
Absolutely. No.
Yeah.
That is how we should do. But applicability is something which will come based on the last financial statement, audited.
Yes, previous audited. Last AGM, whatever you adopted, that numbers you have to take.
Absolutely.
So, ma'am, and you are saying the same thing only.
That's what I'm saying. Both are one and the same.
So to take this question one step further, so let's consider a reverse scenario where the company's threshold have reduced due to, let's say for the reason purpose, like company has done buyback during the year, and that has led to fall in the paid up share capital of the company, which was the triggering criteria for secretarial audit. So after the criteria not being met for secretarial audit, still the audit will be required for the particular financial year?
Yes. So as as provided in the law, we understand it. Latest audited financial statement is what we have to look at it. So until audit is completed, buyback will not really have an impact on the applicability part. So we have to wait for this year to get closed, audit being done, and that is when next year there is no requirement to have an audit. This year we should continue with the secretarial audit.
Understood. Then comes like when I have seen two very different approaches to secretarial audit. So one where audit is done very superficially, and the report is given. The other where it's more far more detailed and process-driven process, almost like concurrent audit. Like throughout the year, you keep checking what are the processes and mechanisms being followed, especially in respect of sector-specific applicable laws. So, as an auditor, what am my what is my professional obligation? How far am I expected to go in this area while examining other specific laws?
All right. For this, I wanted the draft MR3 to be shared in the screen, Manisha. I'll just show you important points where we have to rely upon. Format of MR3 you can display. So while you do that exercise, let me just get back and cover this. So even if we see the guidance note given by the Institute on Secretarial Standards, this coverage of laws is broken into three parts. One is corporate laws. When I say corporate law, company law, and allied laws, SEBI, RBI. The list what we usually see in MR3 already printed, depositories, all these things under corporate law. The last item talks about other laws which are specifically applicable to this particular industry. So this is termed as industry specific laws. This is the verbiage which is used in our guidance note also. Yeah. And the third set of laws are general laws. Yeah. So can you just come down, scroll down? Yeah. Just stop there. Other laws. This is a point which I'm talking. Mention other laws as may be applicable specifically to the company. So this is what we call as industry specific laws. So let's take banking company. Banking laws will be industry specific laws to them. Labor Act and all is not an industry specific law. For any industry it is common, but for this particular industry it is an industry specific clause. Okay. Now coming to insurance company, insurance related laws will be directly connected to them. Or if you talk about telecom companies, we have telecom related laws which are directly applicable as an industry specific laws. Labor laws, or otherwise industrial standing orders or any other general law, pollution laws are not specifically directly directed to the industry specific laws. They're commonly applicable to across all the industries. But if you have a pollution based entity, now waste management companies. Example, waste management companies. Waste management recycling companies directly are connected to pollution control laws. So for them, this will be an industry specific law, though for other industries, this is not an industry specific laws. So we have to do little research, understand the business activity and what laws are applicable, what will be considered as an industry specific law, what is not considered as an industry specific law. Another interesting question usually comes up in any discussion when any company is that manufacturing factories license. So the company is into bicycle manufacturing or car manufacturing. So always question comes in is whether for me industry specific law is Factories Act or not. If you talk about it, any industry factory law is common if the company is into manufacturing. So for them actually it is not an industry specific law. But whereas if you talk about medicines, drugs and pharmaceutical manufacturing or food manufacturing, For them, FSSAI license or Drugs and Cosmetic Act will come into picture, but not manufacturing, because manufacturing is something which is generally applicable to this particular industry. If you load the secretarial audit with all the general laws here, it becomes a bulky and stakeholder will not get the right information. So the idea of this 7.6th point here is to highlight the high level laws which are applicable to this particular industry. Now, can you just scroll down? There is another point talking about laws applicable to the company. Yeah. Please stay there. So the highlighted portion, we further report that adequate system processes of the company commensurate with the size of operations of the company to monitor and ensure compliance with. You can see the language here, applicable laws. So this is common for every law, company law, industry specific law, or general laws, what we are talking, labor laws, Factories Act, etc., etc. For them, this is the paragraph which is applicable. Now, when we know what head we are falling under, that is when the next exercise comes in, to what extent I have to review the transactions or documents. Yeah. Now, it is very clear now, corporate law, industry specific law, or sharing the table. The 6th point, it is coming up. So whatever policy we follow for company law, corporate law has to be followed for industry specific laws. There too, you have to, as I told you, industry specific laws could be exhaustive. Now, for example, you can take example of Apollo. Apollo outlets are across India, and every gully you will have an Apollo outlet. So you cannot say that industry specific laws I will do for all the outlets of Apollo. So there comes the checks and balances, processes in place or not. Our limitations we have to define. So we have to go with how many states they are present in, how many outlets they have, how many I have to pull out, how much is the turnover, based on turnover, how many outlets I should pull out. All these exercise has to be done. Accordingly, test basis we can do this audit. Accordingly, we will give our reporting in the annexure 1, wherein this is done on a check basis. We are trying to analyze whether proper systems are there in place or not. The same example will be continued with general laws and common other laws. Company has signed up rental deeds, but stamping is not done. This is a common phenomenon in any company. So that is where proper process is not in place. Registration is not done. Or labor law. The company has not taken any licenses. We've listed all the laws, but actually when we asked them, they said what law I should follow. Even yesterday, I got a question from somebody asking whether gratuity is applicable to us or not. So that is the fate of it. So first, applicability for general laws, this is the coverage we have to see. Based on the operations of the company is following the processes or not, company has proper mechanism in place or not, is what we have to check. I will give you an example which happens in bigger companies, is that they will have department heads, or they will outsource verification to internal auditor team or external experts, law experts are there. So the company will outsource the work to labor auditors to give them the quarterly report, which report will be placed in the board meeting. So once you have it, you can rest assured that, processes are in place. Some process is there. It is not left open. So this is a process which is followed in companies. If companies doesn't have it, we are suggesting them to have a proper reporting from the report and placed before the board meeting. Accordingly, this processes, can be taken care. Now, removing general laws and labor laws, coming to the sector specific laws, I've explained you sample basis you can do. But as a company secretary, as we are well versed with company law and corporate laws, I would segregate this into 3 parts. One is prohibitive, the second one is restrictive, third is procedural. When you talk about restrictive prohibition, company cannot do some activities at all. So illegal business cannot be done. This is a prohibitive activity. These kind of things we have to 100% check it. Second, restrictive. While Venkatramana was pointing it out, board has given the loan without approval of the board. So this is a restrictive activity. So restrictive activities is also something which we cannot negotiate. Maybe procedural aspect or something which can be taken into consideration based on the materiality which is involved over there. Now, for example, procedure in the sense, as I explained you in the past, there are authentication of documents, authentication of document, notice of circulation, you cannot go back and check, each notice has gone 2 days ahead or not, etc., etc. Then you can apply sample method. Otherwise, it should be 100% sort of things.
Yes. And
is it?
Here one more point I just want to add.
Please, please.
If you are really doing the secretarial audit, want to do more effectively, I suggest the internal audit report of each quarter also you should collect and go through. Why? Because certain
Absolutely.
times what will happen, some of the internal auditors, they also look into some company law procedures like registers maintain, record maintenance or something. If they report in their report that it is not done and your report is contradicting their report, internal audit report for the same quarter, so it will be a big issue because company will come to
Absolutely.
know internal audit is reviewed every quarter by board meeting audit committee and secretarial auditor is not pointing out the issue. Like for example, in some cases what will happen, internal auditor will say the display of the company in the factory, this thing they have not displayed these things because it was there in their SOP. Like details of the company name, GST number, all these things. If being a company secretary, you are not. Same thing is also covered under Companies Act. Then you will be unnecessarily put into trouble. So go through the internal audit reports for all the quarters once.
Yeah. And in addition to that, Venkatramana, that's a good point. Another point is that statutory auditor's report. This is also actually ignored by people. Auditor
No,
report also has got a lot of points which we have to
audit
read and understand.
Correct. Caro report nowadays, they are more expanded to the company law also.
Correct.
185 they will comment, 186 they will comment,
They will comment.
188 they are commenting. Their
NBFC, they'll
comment is
comment.
there in Caro report.
Yes.
Director qualification, disqualification in their report, it will be there.
Correct.
So that anyway we have to do it.
Absolutely. And notes to account is also one area which people company secretaries do not lay hands on, because notes to account says X factor, but whereas we are saying no. Like for example, issue of shares is reported in the financials, notes to accounts, auditor missed it. Even we miss it if you don't see the notes to accounts. So that is important for us to go through. Yes, these are
Here I
very
will
important.
suggest. Here I will suggest two things. One is notes to accounts and the audit report of the previous year, which is following adopted in this financial year by 30th September.
Correct.
And draft report for the current year also we have to look. There always the issue comes, auditor will say, you get audited secretarial report first, then we will give our audit report. And our auditors, we will say, we want numbers. So that's why at least both of us should be in a position to share the draft reports so that what they are commenting is not in contradictory to what we are commenting.
Absolutely. Contradiction should not be there. That has to be taken care. Absolutely. I'm with you on that.
Definitely, sir. Agreed. With that being said,
previous year, why I am telling audit report, auditor has given some comment and the director's report explanation is not provided for that adverse remark. Then it is a disclosure requirement under 214 section. So that is how where we will fail.
Absolutely.
So previous year, we need to go through thoroughly notes on accounts and audit report, especially on adverse remarks. Second, current year report.
Correct. Yeah.
Yes, sir. So with that being said, so often like auditors face struggle into deciding what actually deserves reporting in MR3, because company may have some minor procedural lapses or delayed filings or recurring governance gaps or a series of events which individually does not appear to be material, but indicate some kind of weakness in the compliance framework. So, according to you, what really constitutes a reportable non-compliances versus a mere observation?
Okay. So, yeah, this is very important. Again, there is a standard, an auditing standard, which is providing about it. And the concepts which are used here is modified opinion and unmodified opinion. So, modified opinion, unmodified opinion means we are satisfied. Majorly two factors. One, we are happy with the compliances which are there in place and processes in place. Second, there is no material misstatement which we have come across. If we are happy with these two things, that is called unmodified opinion. Now, coming to the modified opinion, whatever factors I have said, if that is not in place, meaning you don't have enough documents or evidence to frame our opinion, final opinion, or either you identified some misstatement in the document which is provided. So that is when you will frame your opinion as modified opinion, and we will discuss with the management if that modified opinion can be settled by giving enough supporting evidences or clarifications. Once that is done, if you are satisfied, then again we can go back to unmodified, meaning a clean report. Unmodified is a clean report. Modified opinion is something with reservations, remarks. And if you talk about standards, there are three things they have highlighted. One is adverse remark, the other one is qualified report, and disclaimer of opinion. These are the three terminologies which are used. So adverse remark is very clear that you found a non-compliance and adverse remark karo. And we will talk about what kind of points only should be reported in the observation, that we will see. But qualified is something where you got the supporting, but you're not satisfied. That is not completely sufficient. So you will give a qualified report sort of thing. Third nature is that disclaimer of opinion. So, they are of some opinion, we are of some opinion. So we'll disclaim that, we are of this opinion or dependent on these factors. So I'm disclaiming myself from this particular opinion. This is how we report it. These three terminologies are defined. Now, what is that we should report? There is a small delay in filing the forms. Is it a grave mistake? Should I report it or not? Or, every time the company was giving the notices on time, but one particular director, there was a delay in issuing notice. I mean, just randomly picking up some cases. So whether this is a minor or major, this is what we have to understand. Whatever impacts the operations of the company, I feel it is a major transaction violation and has to be reported in the reverse adverse thing. Otherwise, we can report this as a compliance gap, or, the process system is in place accepting 1-2 points. I don't think this is a grave non-compliance, what we have to really highlight in the audit report. So for this, we can take some examples. One second. Material violation of law. There is a material violation of law which we come across, like, started operations without amending the memorandum of association. That is a materialistic. So that kind of reporting has to happen. Or repeated non-compliances. It's not one time. Every time there are non-compliances repeating, like for a filing of forms, maybe out of 100 forms, if you find 3-4 forms that they are not filed on time, that is fine. But if you notice that every form is filed with a delay of 30 days, 60 days, is something which is there is no proper system in place. So this has to be reported. Governance failure. So if something impacts the stakeholders' interest, those kind of gaps have to be reported. So when you talk about this, materiality takes it upper stage of it. Minor things can be ignored, sort of thing. But what is minor, what is major is something depends upon how we determine the case, and guidance notes gives a lot of information about this risk analysis and materiality analysis. Accordingly, this reporting can happen.
Yeah. So,
Just one.
yes, sir.
Just one point I want to add. To find out that things done now which are not to be done, or things not to be which are to be done are not done. You need to also go through the financial statement numbers also. Sometimes what will happen, the investments, what for the previous year numbers to current year number has drastically gone down. That is, investment in subsidiary has come down. Our investment has gone up some percentage. So which attracts that 186 section. If limits fall beyond the limit. So we cannot simply go through the only board meeting resolutions and all, because without passing resolution also transactions may have occurred, which we don't know. When you see 186, there is no resolution, but already investment is done by the company.
Absolutely. One such example is that advance for investment, Venkatramana. In some company, they have given advance. Okay, what they skipped it because they have not invested, they just gave advance. Okay.
Yes, especially real estate companies when you are doing the infrastructure companies.
Absolutely.
You should be double careful.
Absolutely, 100%. So yes, point well taken.
Yes. So
Yes.
yeah, moving on. Here in the MR3, we see that IOV further report that during the audit period of the company, the company has. So here are we just like supposed to mention the non-compliances or observations or any material events as such?
Okay, coming to that particular point, actually, it talks about events. You can read the bracket over there. Give details of specific events, actions having a major bearing on the company affairs in pursuance the above referred laws. So there are two important things. It is talking about specific events of actions which has major bearing. It's not a normal bearing. Like you opened a branch office, as I was talking about Apollo or Hetero, they just opened a new outlet. 51st to 52nd they opened. That is not a major action. But if they open 100 outlets on a single day, that is a major event which has bearing on their company affairs. So that is how calculation we should do. That is important. Second is refer to laws, above referred laws, rules, regulations. So it is not restricted to corporate laws. Any kind of law, whatever thing it impacts. If you have set up a huge factory, you got consent for operations. Consent for the operations is the time when you can start operations. This is a huge news to the stakeholder. So that particular activity can be mentioned over here, though it is not a corporate law, though it is an industry specific law. So important is which has major bearing on the company affairs, and second is any law for that sake, whatever is applicable to the company. So these are the points which we have to highlight over there.
Understood, ma'am. Understood. And then there is
One more point is the board report disclosures previous year. You have to also check like the impact any transaction affecting the financial position of the company after the date of the balance sheet, but before the date of the board report. These things normally people won't look into. Like for example, huge penalty or huge order is passed by income tax tribunal for payment, which will have impact. Like it may be during the month of May, June, July. So these kind of things should have been disclosed in the director's report, which they will miss it. So as an auditor, we have to cross-check that also. Previous year board report disclosures and transactions, major events happened. Like Madam what she told, example, these kind of examples also will come there. Like factory accident happened where your production is stalled for 3 months impacted. That has affected the financial position after the closure of balance sheet.
Correct. Strike could be one case, Many
other things. Any event affecting your financial position as in the balance sheet date from the till date.
Correct.
So the next question which we have is like during the CIRP proceedings under IVC, we see that there are not many compliances which are followed. So to what extent the secretarial audit procedures are to be carried out, given that there is a limited scope only to work as well in the
audit. Okay, we heard about moratorium. This is a different topic altogether, but we heard about some of the newer concepts which are used in IBC. One is moratorium period. So usually people go with the word, I have a moratorium period, so I need not comply with the Companies Act. This is a blunt thing. Any CFO or any company secretary, generally, if they don't know, that is how they talk about. So honestly, moratorium clause, if you see, that doesn't take away the responsibility or liability on the non-compliances of Companies Act. Meaning, moratorium is only for some factors that you're not required to legal proceedings and all, but not for the non-compliances of Companies Act or industry specific laws for that sake. So this is one important thing. And another important thing is that who has the authority, who has the right to conduct this provision, compliances of Companies Act or any other law for that sake. So RP is the one who takes over the operations of the company from the directors, and directors doesn't have the powers anymore. So he is the one who has to ensure that the compliance are taken care. In practical scenario, what happened in our case is that there are certain loans which were taken during the after appointment of RP, but there were no forms which are filed. So we have understood that he does not have the immunity not to file the forms. One is agreed that board meeting cannot be done, but RB himself can take a decision, but that should be in writing somewhere. And the other obligation is filing of the forms and maintaining the registers. There is no immunity which is given for the compliances to be done. So here, even if the company is in IBC, secretarial audit has to be done. Only thing is, board meetings will be dispensed with. Instead, board meetings, RP will come into picture. Whatever board has to do, RP has to ensure that that is taken care. So this is a shift which is there, and RP is the one who has to take care of the compliances. Venkatramana, do you have any other opinion on this?
Yeah, I just want to add one point. First of all, we need to understand the annexure to the in the schedule of the IBC code itself. They have given to what extent the different laws are excluded for the purpose of IBC point 1. And the compliance will be two types. One is during the process of RP. Second one is after the RP process is completed when the resolution plan is approved. In case of the if you are auditing the year, your audit year period is after the resolution plan is approved, then you are required to go through the resolution plans. Any waivers or exceptions given in the order, in the resolution plan itself in relation to the compliance requirements. Like in the resolution plan, if they say the company need not convene the AGMs, pending AGMs, or need not file the returns, pending returns, or all the forms which are pending with MCA need not be filed. Something, anything is like that is there, then you need not report in this. Only you have to mention that as per the clause, so and so violations till the date of resolution plan approved during the moratorium period to this are exempted as per the order. Hence, there is no non-compliance to that aspect. But if you are doing the audit in the process of the resolution plan is in moratorium period is in continuation, what Bhavani madam told, that has to be followed.
Correct. Thank you, Venkatramana.
Yes. Thank you, sir, for the inputs. Now, one more common practice which we see is when a company secretary or compliance officer gives the auditor a management representation letter in any aspect, specifically in relation to related party transactions. So, does management letter provide any immunity to secretarial auditor for reliance placed on management statements and all?
Okay.
To what extent does it safeguard a secretarial auditor?
Okay. So, related party transaction, we will keep it aside, and immunity, both we will see it separately. So, as far as immunity is concerned, management representation letter will not really have a list of laws. I have to do independent job of identifying or verifying the list which is provided by the management to satisfy myself that applicable laws, whatever are listed, are final or not. Okay, so that independent judgment has to be done. At the most, the information can be taken from the management that what are the list they have framed and all. Immunity cannot be given by the government for this exercise because the very purpose of appointing us as secretarial auditor is double checking what is applicable to the company, whether that is complied or not. This is the reason why we are appointed. So immunity as such will not be available. But yeah, as far as related party transactions are concerned, we should understand what kind of deviation it is there. If it is part of accounting standard or financial statements, there is a clear demarcation that that is the responsibility of the auditors. We are doing a non-financial activity, review sort of thing. But if it is disclosure in AOC2 or something which is again a related party transaction, or the failure to incorporate the transaction in the audit committee or board meeting, or defining whether it is an ordinary course or not, or arm's length or not, enough supporting is there or not, that is our independent job. Meaning, there is a statement in the board meeting stating that the company has considered this as an ordinary course of business and at arm's length, and decision has been passed. But some supporting material should be also put in the board to stress that this is an ordinary course and at arm's length, without asking the management to give the supporting documents. That is a failure at the Secretarial Auditor Act. So the magnitude and the question has to be exactly looked into. Enough evidence have to be taken. Based on it, we can take a decision.
And one more important point is, one more important point we need to understand is why you are taking management representation letter. Management representation letter is not a letter which management claims itself that they are away from the systems or the compliance. It is not the fact. Management representation letter we take only for the purposes where we have not found any evidence of the what statement the management is giving. We are taking, it's a form of declaration that they are explaining the facts happened, but not in compliance perspective. So compliance perspective will never change, and no immunity will be given if you are not reporting any violations after taking management representation.
Yeah. So as such, it is clear that for compliance gap, immunity will not be extended. Right, Venkataramana?
Immunity cannot be extended, which you are supposed to do as your job.
Absolutely.
If you fail to.
Yes. Correct.
Saurabh, you were trying to say something.
Yeah, actually what we are doing is, in case of this related party transaction, whether the transactions are at arm's length or at non-arm's length, we are taking certificate from the auditor only, saying that we're working with the workings basically, as to how they have ascertained whether it's arm's length or non-arm's length.
Yeah. But reasoning is important. Just a document will not have reasoning is important.
No, with the workings.
Absolutely. No, that is completely good. That is completely So I think, Manisha, these are some of the points which we have. And any more questions, Manisha?
No, the floor is open for questions if anybody else has any.
Yeah. So, I mean, in the meantime, let us display that Tata MR3. There are 2 points I wanted to show. We'll just see and conclude on it from our end, if there are no more questions. Yeah. So come to the other loss, 6th point. Yeah, this is important here. So I was telling you the other laws is in continuation of the corporate laws, and for them, these are the laws which they have listed: mines, minerals, air pollution, water pollution, environment protection, Factories Act. I mean, Factories Act might be relevant. I need to know what their operations are. Accordingly, they have put up this, important points here. Okay. So other than that, they have not disclosed about general laws, labor law, payment of bonus, gratuity, etc. That need not be given. That is what I was trying to explain you. Now come to the next page. Okay, come to the management representation letter. Venkataramana was saying some point, right? We will just see the management representation. Yes, if you see, this is a management representation. What our report is based on this report, karke, they have given that as an annexure. You can see second point. Our responsibility is to express the opinion. So it is very important. This is not a certificate. It is an opinion based on the verification of the records. Okay. Second point is also important. We followed the audit practices and processes as we appropriate to obtain reasonable assurance about the correctness and contents of the secretarial records. The verification was done on test basis to ensure that correct facts are reflected in secretarial records. We believe that the process and practices we followed provide a reasonable basis for our opinion. The second point is very important. So this is what I wanted to show to everybody who have attended this session today. And that's it, Manisha. That point I wanted to stress.
Yes. So anybody else having any questions?
I have a question.
Yes.
Thank you very much, Bhavani ma'am, for this wonderful session and the insights on Secretarial Audit. I have one question that we were discussing about the internal audit report. Venkataramana sir was also emphasizing that we have to obtain the internal audit report, and if there is any discrepancy provided in terms of the secretarial compliances, that has to be in line with our Secretarial Audit report. So my question is, if the internal auditor has reported something which pertains to 2 years back, a very minor non-compliance that have occurred in terms of filing. If he is reporting in the current year, they have observed it in the current year. It's relating to some minor non-compliance of the past 2 years. Is it necessary that if we do the audit for the current year, should we include that in the Secretarial Audit report?
So 2 points are there, Gautami. If it is a minor delay in filing of forms, it does not have any bearing. That is first point, bearing on the operations of the company or impact the stakeholder. Second is, if you see strictly secretarial audit is done for one particular financial year. This is only filing of form. If it is something, if the internal audit identifies that the company has not taken fire approval, okay, fire approval or pollution approval at all for last 2 years. This is something alarming, which you have to produce it here that the company delayed in taking pollution approval and that is obtained during the financial year. But minor thing is something which should be ignored. Filing of forms is something we need not mention.
Thank you very much, ma'am. I'll actually tell you the exact case. So managing director was appointed 5 years back. In the MCA records, especially in the signatory details on the MCA portal, the additional director is showing up and also MD is also separately showing up. So there was some issue happened while filing the forms because of which the name is appearing twice on the MCA portal. Okay, so some issue with the DR12 filing. It was not properly filed because of which the additional director designation still appears apart from the MD. So this was a discrepancy noted by the internal auditor in his report, ma'am.
Okay, but all the documents in the company show him as a managing director all these years?
Yes, ma'am. Yes. Yes, yes.
Only filing is not done. Correct?
Filing was...
Then in that case, 5 years back when secretarial audit was done, that point in time, we would have identified that as a gap, no?
Yeah, I mean, the secretarial auditor may have not done that.
Then probably in good governance, I would suggest, there is a form which is, it is not a really materialistic, but the position is pertaining to managing director. It is a positive reporting. It is not a negative reporting. You have last item, right? Where actions have been done. There you can produce it. It is not a non-compliance. That is a non-compliance for the past thing. If the company is non-compliant for 4 years continuously, every year you will not produce the same thing, right? So
yes,
5 years back when non-compliance is there, that point in time we should have recorded. And when the company has stopped the non-compliance today, you will just mention, you will report as a corporate action.
Okay. Thank you, ma'am. Thank you very much.
Right, Gautami.
Any further questions? Anybody?
All right, Manisha.
So I think we'll conclude, ma'am. Thank you so much for this insightful webinar. And thank you everyone for joining.
Thank you. Thank you, Manisha. Thank you, everyone.